The Bank of Canada is once again reminding Canadian borrowers adjust to the new reality of higher interest rates and prepare for more pain from the 10 rate hikes that began 20 months ago. The bank's deputy governor is speaking right now in Vancouver. Jeannie Lee has been listening in. She joins me now with more. Jeannie, what's the context of this latest reminder?
Well, Arthi, the bank is basically providing its fall update to a report that it puts out every spring, and that is the Financial System Review, which looks at potential risks to Canada's financial system. You want the system to be stable, and so the bank spots areas of vulnerability. Now, back in May, one of the risks that it highlighted was the fact that borrowers, especially Canadian homeowners, are being so squeezed by obviously the rate hikes that had to come into play to fight inflation. And since then, of course, there have been 2 more rate hikes, making that squeeze even harder. And so those who have been already facing increased mortgage payments have certainly felt that sharpest, fastest hike in decades in rates. And that's about 40% of mortgage holders, according to Deputy Governor Carolyn Rogers. Here's what she had to say about the rest of the people.
By the end of 2026, virtually all remaining mortgage holders will go through a renewal cycle, and depending on the path for interest rates, may face significantly higher payments.
So that wave of resets, when those mortgages renew, ones that were taken out at rock bottom rates only to now have to renew at much higher rates, we'll see monthly payments just balloon, and it'll be quite a shock. And the risk is that if enough households cannot handle it and have to default on their mortgages, well, it would be painful for them, but also painful for the lenders that are left holding the bag. And that's a potential risk to the entire financial system. So really, this is a reminder, Arthi, again, from the Bank of Canada to realize that rates will not go back to those low levels, so don't hold out hope. Anyone who feels that they are in trouble should adjust and maybe make some moves now before they face that tough music that's coming ahead. So really just one of a series of warnings that we've had from the Bank of Canada on this.
And Jeannie, the Bank of Canada has been focusing more on this potential shockwave. So what more has it said?
Well, the one thing that Tiff Macklem, the governor of the Bank of Canada, was very clear on a couple of weeks ago, he started telling people that yes, the reason rates are being held at current levels with the Bank of Canada policy rate at 5%, one of the reasons is because of this giant wave of resets, mortgage resets that's coming. And so, again, all of this is to serve as a reminder that people really need to take this very seriously. And if they have to take some action now, cut back where they can. If they can't, then make some harder decisions on what they can, get rid of in terms of other debt. Anyway, to prepare for that big ballooning payment, because it's not good for the borrower and it's not good for the financial system either.